The big picture from our latest business snapshot is that businesses are recovering after a challenging period marked by weak private demand, elevated costs and higher interest rates. The recovery is still, however, uneven, with momentum mixed and varying both across sectors and states. In the June quarter, Westpac's business cashflow gauge, that is businesses' income to expenses, slipped slightly, down 0.4% in the quarter. But it retained most of its gains over the past year and was still 1.6% higher than a year ago. Now, the recovery in cash flow conditions is not yet broad-based, as we continue along the bumpy path of transitioning from public sector to private sector-led growth. Still, we have seen a turnaround in cash flow conditions among consumer-facing sectors like personal services and retail sales, amid a positive uptick in household spending in the most recent quarter. Cash flow conditions among business services also showed yet another quarterly improvement. Somewhat surprising was the sharp dip in cash flow conditions among property-related industries, with revenues down sharply. But transaction and leasing indicators have shown some renewed momentum in the commercial and industrial property space, and this should boost revenues ahead. Now, if we drill into businesses by size, we can gain some greater insights as to the sustainability of the recovery and identify any pockets of strength or weaknesses. An overarching theme is that commercial businesses have fared much better than SMEs since the pandemic and post the period of surging prices and RBA rate hikes. This is still the case. And even though we have seen some easing in commercial's cash flow conditions, there is evidence of a broadening recovery in the private sector. Revenues increased across a greater number of industries, and in particular those that are consumer-facing. But SMEs are not missing out. Conditions are strengthening, albeit from a lower base. The share of improvement in cash flows rose for the third consecutive quarter in Q2, and the SME cash flow gauge stood at its highest level since 2023. Still, there are pockets of stress, and some SMEs, including those in the construction industry, continue to face challenges. Now, while the underlying trend in cash flow conditions point to a recovery that remains incremental rather than decisive, business balance sheets across SME and commercials remained in solid shape in Q2. Both commercial and SME businesses are in a solid position to meet short-term liabilities. Also, if we see a convincing lift in the domestic recovery that ignites animal spirits, by and large, businesses' cash balances are in a solid shape to lift investment. For now, we continue to expect a gradual recovery in the Australian economy and corresponding lift in overall cash flow conditions. We expect the recovery to gather momentum over the coming year, with a further 75 basis points in RBA cuts to 2.85% on the horizon, to also support business cash flow conditions.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.